Theo, it's been a heck of a time as a South African. We've just come through a long patch of unexpected load shedding, where investors and, in fact, every South African has spent many unnecessary hours in traffic. Small businesses have been severely affected. We're still surrounded by bad news from all these commissions. The Zondo Commission, not the least of which, is really causing people, sleepless nights. It's a pretty tough time to be a South African and to kind of have any kind of a long-term view as to what's going on. What should we be doing now?
Warren, that's correct. The element is that the biggest enemy for investment and investment performance is yourself, is the individual. And that's been proven over and over again. We make emotional decisions when it's about money. And we need to make sure that the decisions are rational, not emotional. The second point is your major aim of any long-term investor is to outperform inflation. That is your number one enemy. So putting those two together, any balanced portfolio, any portfolio that we recommend, within that portfolio, you will already be about 50% overseas and 50% local. So actually, when the rand weakens, the portfolio values go up. When the rand strengthens, the portfolio values go down. So therefore, in the standard portfolio, balanced portfolio, index portfolio, you're already 50% overseas. Therefore, we believe that structure insulates you from local inflation, because that's what we need to outperform, and also insulate you from volatility. And we're comfortable with that portfolio given what we know now.
Okay, Theo, so if we're not making any changes now and we've been surrounded by all this bad news, then what would be the levers or the triggers or the flags, the red flags, if you will, that would make us change our view from where we are today?
Warren, we've come out of the 9 horrendous Jacob Zuma years. And I say horrendous, according to The Economist, our economy should have been 25% bigger. Now, just think about that for a minute. That means unemployment shouldn't have been close to 28%, it should be down below 20%. And this 25% calculation is purely had we kept track with the growth in the rest of the world. That's purely, nothing better, nothing worse, just keep track. So the Zuma administration actually lost us that momentum. The point is, can we pick up that momentum? And that will be the triggers. The first time President Cyril Ramaphosa will have a real chance to show what it's about will be when he announces his cabinet after the election. That will be a major trigger point. If that cabinet is still the Jacob Zuma cabinet with the people in there, which we've known is clouded by the different commissions and by different court cases, if that's still the cabinet, then one can assume that this horrible 9 years will not come to an end. It might drift not at the same pace downwards, but it's not going to come to an end. That'll be the trigger. If there's a change there, then we can say, wait a second, there's some movement and we might get on a better track. So that'll be the big element that we will be watching for. And unfortunately, that will be post the election. And we have to realize that when politicians enter a electioneering phase, they're talking to their supporters. They're not talking to us or the world. They're trying to get voters at the booth, at the voting booth. And I think we need to be very careful, but that will be the big element. What will the cabinet look like? And number two, will we then see real action on Eskom? Will we see real action on the other state-owned entities? And I think that will be the key. If it's not the cabinet that we want, if it's a cabinet that's unfortunately looked like the old cabinet, the Jacob Zuma cabinet, and secondly, there's no action, then we will certainly look at how we can adjust that. But from your point of view, Warren, from an advice point of view, if we say, then we will change, what will that changes entail?
Theo, I think from an advice perspective, looking at where we are today, we've always had a view that you should have some exposure overseas, and at the very least, about a quarter of your assets should be invested overseas, with wealthier families moving up to 50%, and then families with intergenerational wealth, where we know it will go to the third or potentially the fourth generation. We would say to them that they should move their asset base to 75% overseas. If those red flags come up that you've mentioned, both Eskom and the lousy cabinet do persist, then I think our recommendation to all South Africans will be to shift their local allocation from 25% to 50%, so that 50% of your assets are directly invested overseas, with everyone else with money going to at least their children or further, moving to 75% or more. So that will be the major adjustment that we would make. We would be very conscious of where the rand is versus the dollar, but that would be a major shift for us. And it's not a decision we would take lightly, but I think the flags that you've mentioned are serious and would be to the long-term detriment of our country and therefore of our investors. So I think, just to summarize, for now, let's hold tight. We are watching, as an investment business, this is something that we're focusing an incredible amount of attention on, but we are not getting overly emotional in an election cycle to look at what the noise is now. We're looking through the noise, trying to understand the news, trying to see what's actually happening that's good and what's happening that's really bad, and figuring out, on balance, where are we going. So short-term bad news, we're not going to focus on too much, but those big structural issues, those are the ones that we are focusing on. So for now, hold thumbs, sit tight, don't make big changes. We'll let you know when to panic.